What's going on, guys? Welcome back to another video. In this video, I've got another incredibly important AMC update to bring all of you this evening. So what we're going to be talking about in this video is how the tables have just kind of been turned on all of the AMC shorts because a couple of the different brokerages that the hedge funds and the institutions are trading through that are allowing them to short shares of AMC have just turned that off. They are essentially banning the actual ability to short AMC at their shop. This is very good news for us as AMC holders because it's going to be a lot harder for these different funds and institutions who want to short shares of AMC to get their hands on these specific shares. We're also going to be doing a little bit of an options update and analyzing the most recent Ortex data, which does actually play a pivotal role in what we are seeing out of these two different institutions that have turned off the ability to short AMC stocks. So before we get into all of that information, if you guys enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you would like 2 free stocks with Webull valued up to $1,850, make sure you check out that link down below in my description. So AMC had an incredibly volatile day. We did see a volatility halt, but we did end up closing down about 18%, and we're down an additional 1% in the after hours trading period. But what I want all of you guys to think about, especially you older apes and even the newer apes, we have gone up such an incredible amount over the last 2 weeks, even over the last 2 days. So a red day after 2 consecutive, almost 100% plus days does not surprise me at all. And I am not worried in the slightest bit. We still have a long way to go, and we haven't even started yet into the squeeze. The squeeze really has not started yet. What we've been seeing over the past couple of days and weeks is a FOMO rally mixed with a gamma squeeze. So when we come over to the option chain for AMC, you're going to notice a lot of additional options contracts above the $70 and $100 marks. So I want to kind of caution you guys on a couple of these different options contracts. When new options come out, you're essentially buying them directly from the market maker, or you're buying them off of somebody who has literally just bought it and is flipping it to you. So essentially what is happening is that the market maker is setting the price, and the contracts have not been available for a long enough time to actually reach their fair value. So I would just caution everybody, if you are going to trade options, make sure you know exactly what you are doing and you have experience with options. But having a $145 strike on every single options chain right now is very important because it's going to lead the way if we continue going up on this uptrend that we have for AMC that we've seen over the past couple of days, setting today aside. It's going to give us a bigger opportunity for a gamma squeeze. Now, let's take a look at what we have for this information from Raymond James and Jeffrey. So we can see here, I do want to touch upon this very quickly. AMC warns investors they could lose everything. Now, when you have a corporation and you have a situation like we have right now in the short squeeze, it's very complicated and you have to be very careful if you are an executive about telling people to invest in your stock and actually talking about the potential for a short squeeze. This statement right here, AMC warns investors they could lose everything, in that filing that they released today, is a compliance effort to make sure that their ducks are in a row and they are not going to face any kind of SEC scrutiny when this squeeze ends up kicking off. GameStop actually put out a very similar statement back in January when their squeeze was kicking off as well, even though that rally in January was not technically a squeeze. So this is going to be very important. Meanwhile, Jeffries is said to be blocking short sales of AMC, GameStop, and Microvision. Think about what Robinhood did to retail investors back in January, not allowing the buying of AMC shares. This is basically what is happening to some of the different institutions or hedge funds that are trying to short AMC. The tables have been turned and they are no longer allowed to actually enter into any short positions at Jeffries. Now, Raymond James has also been shorting of AMC and has also blocked buying the theater chain on margin. A person familiar with the matter told Seeking Alpha, and this person, you can see it on a Bloomberg article, but I reached my article limit for the month on Bloomberg. It's a trader that actually trades through these different prime brokerages. So this is pretty credible information. Now, when we come over to Ortex, this is where I think this is going to get really interesting. When we come and look at the returned shares right here, 9.14 million shares have been returned versus a 6.77 million borrowed against AMC. In my previous video that you guys saw today, the difference right here in the net borrow was actually only negative 97 or 93,000 shares. I'm not exactly sure what the exact number was, but it was in the 90,000 share range. It is now at negative 2.37 million shares actually returned to institutions or lenders who have actually loaned out shares of AMC. Now, here's what I am thinking about this. When Raymond James and Jefferies turn off the ability to short AMC, you have to think about what is going to happen to the existing short positions. Are they allowing those positions to continue and they can cover at a later date? Or did they basically perform a forced share recall and are cutting off the whole lending program and the short program that they have at their brokerages, forcing the actual shorts to actually return these shares and maybe even cover? Now, overall, the broad data on Ortex does not suggest a massive wave of margin calls or shorting. We have seen something very interesting happening with the actual Options Clearing Corporation and how they did need to up some of their margin requirements, and we went over that today as well. But utilization is still at about 98.73%, still incredibly high. We see the shares on loan at about 138 million, but that number could actually change tomorrow with these borrowed and returned shares numbers that we are seeing, because these are the live updates and these numbers come in a little bit slower. Now, the actual estimated short interest as a percentage of the free float is still relatively high according to the data that we have, the reported data. So we are seeing a 17.62% short interest. So again, you have to take everything that you see on Ortex with a grain of salt, because one, they are not getting the full picture in terms of all of the market data. If I'm not mistaken, Ortex only has about 85% of the total market data, because they get a lot of their data from S&P Global. And we also know that the actual data that the shorts have to report, they're self-reported, so they don't even have to report a short position. It's honestly them just being overly, I don't even know why they would actually even report their shorts if they didn't have to. Now, again, we can see up here, estimated short interest 17.93%, slightly different from what we are seeing as the most accurate numbers now. So we are seeing a net return in these shares. And they are actually cutting off the actual short program that is going on. This is very big news. Now, I apologize if those last couple of minutes were a little bit redundant, but I want you guys to understand the gravity of this situation. Remember what happened to us as retail investors when we were no longer allowed to buy shares of AMC. The stock price fell because we were only able to sell. It's the exact opposite situation happening right here with Jefferies and Raymond James, and I think that this is only the beginning. We've seen Charles Schwab in the past come out and say that they are no longer allowing naked options to happen, or the selling of naked options to happen on AMC and GameStop, and the margin requirements for these stocks has actually increased as well. And I do believe that Jefferies and Raymond James are going to only be the beginning in cutting off the ability to short AMC. So that is really going to conclude this update for tonight. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. Cost you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great evening, and I'll see you guys in the next video.